Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi, Batra, and on this special edition, we're going to be talking about all that glitters, and that is gold. Yes, gold is glittering bright, and in fact, the brightest in its history. Gold prices have hit record high levels, both in the international as well as the domestic market. We now have a peak of 65,140 rupees per 10 grams on the MCX, and of course, $2,141 per ounce as far as the gold prices in the international markets are concerned. Now, the key factors that are driving this rally in gold, and also what is the next strategy for you as investors of gold, is something that, if you're wondering, that's going to be something that is going to be our focus of this discussion. A very special guest is joining me on this discussion. Ajay Keria joins in. He's the MD and Director at Keria Advisory. Warm welcome to you, Mr. Keria. It's always a pleasure to host you on Business Today TV, and it's the right time that we've got you on because gold prices are shining the brightest in its history. First up, tell us, this is the level that we have not seen before, and it's been achieved on a back-to-back rally as well. What are the key factors that have driven gold to all-time high prices?
Very good afternoon, Sakshi. Definitely, since last 1.5 years, we have seen there are many factors, or we can say perfect environment, which are supporting gold. First of all, we have seen in 2020, post-COVID, global economy was started sinking, and because of that, we have seen safe haven buying was gold. And since then, we have started seeing gold prices moving on a positive side. Before COVID, in the month of March, gold prices was hardly around 29,000 mark, and we have seen a first leg of 56,000 in 2020 itself. But since then, we have seen global economy is deteriorating. Interest rate keep on increasing. Despite that, we have seen a good rally in gold because central banks are now continuously holding or continuously buying gold. In 2022, we have seen a record import or record central bank holding. Even in domestic market, we have seen gold bond, we call it as SGB, where we have an interest of 2.5. People has invested very well in that bond also. No doubt, ETF is been slightly lagging behind. As we know, in last couple of years, equity market is going very well. That is why ETF was silent, but the geopolitical tension now in 24, all are expecting interest rate cut would be there because it is around almost 62 countries will be having an election, and generally we see whenever election period comes, government will try to push the economy on higher side. That is why interest rate cut in US, Europe, even in India, all are been expecting. So all these factors like geopolitical tension, interest rate, or we can say central bank continue buying, all these factors makes gold attractive destination for 24.
Okay, so the next question that everybody wants to know from you is perhaps that where are the gold prices headed from here? Are we going to see further highs from here? We are looking at the US Federal Reserve, central banks across the world, which are now going to be having meetings with respect to interest rate factor and to whether how soon can interest rates start to get cut globally as a phenomena as well. And of course, keeping that factor in mind, what will be the trajectory of gold prices going forward, sir?
See, Sakshi, whenever we talk about gold, gold gives a cyclical return. We have seen before this from 2008 to 2013, we have seen a very tremendous rally in terms of international. We have seen gold prices move from $680 to $1,920. That is more than 200% gains has been seen. Similarly, on domestic side also, we have seen after a great rally from let's say 2006 to 2012. Now after a very long period, market has now started moving. So I think a very long rally has been still due in gold prices. Don't be afraid that prices have now tested 65,000. That means it's a lifetime high. It should get a correct. Little bit correction may be possible in next couple of months because we Indian are having a tendency of price sensitive. Whenever there is a slight price rise, immediately demand slows. But as we know, we India buy gold on rituals or sentiments. So
Yeah.
definitely physical demand is going to be there. So I hope for next couple of months there could be a possible of some consolidation or slightly pullback. But post June or second half is going to be a very lucrative for gold. Maybe a level like 70,000 can easily achievable in domestic market in this year.
Okay, 70,000 is coming sooner or later in the domestic markets. Currently, it's at 65,000. A lot of people would be thinking that whether should I invest at this level or not. It's already at record high levels. But now that you give us an outlook of 70,000, would you advise investors to go ahead and buy even at this price?
In last 3-4 period, we have seen the perfect environment is continuously supporting gold. We have seen when the prices was around 55,000, then also it was a costly affair. 60, it was a costly affair. Now it's around 65. So I think a little bit consolidation may be possible. We can see a level again like 60 to 60 to 500, which could be a better to place it. But I think one should start putting some part of gold in their portfolio. In fact, there is a study shows in equity portfolio, if you deploy 20% of gold, that will reduce the risk and enhance the return. So I think 65 little bit maybe because of last three sessions rally slightly costlier. So maybe a pullback towards 60 to 60 to 500 would be a good level to re-enter. But overall by this year and we are expecting 70,000 will definitely achieve.
Okay, by this year end 70,000 is coming in, and maybe some dips you can get around 62,000 or 62,500. But even that is expensive for a lot of people. Those people who must be thinking that, the past levels of 50,000, 55,000 odd, whether they will get an opportunity. Is there a possibility, or those things are back in history and those prices are hard to believe that they will come back again?
Frankly, Sakshi, looking to the Nifty or Bank Nifty, what they have rallied from 7,500 to
Yeah.
22,000, I think gold is still cheaper as compared to equity market. So I think maybe 62 should be a new base, or maximum 60,000 could be a new base, because if we talk about the inflation, gold always carry inflation. So as we know, the global market is facing inflation concern. That is why gold continue to be held over and above geopolitical tension, and equity has rallied very well in last couple of years. So I think some kind of heavy valuations are there in equity market. So shifting could be possible in gold in itself. So I think gold is very cheap as of now. Also, we may see prices moving towards 75 also in next 1.5 year, or we can say by next year we can see. But I think 70 is a good, and current price is also not a so much expensive what people are thinking.
Okay, so for those investors who may be taking your advice and looking to now invest at around 62,000, 62,500 whenever these dips come in, what is the best form of gold that you tell investors to go ahead and invest in? These days we have a lot of options available, be it from physical gold, gold coins and jewelry, which are the normal options. But then apart from this, we have digital gold. So people are exploring even gold mutual funds. There are gold ETFs that are getting launched on popular platforms like Zerodha. So a lot of people, young investors, are getting access to investing in those forms as well. Plus there is the other sovereign gold bond that we keep on getting from the government as well. Which is your personal favorite that you would tell all the investors to add a touch of gold in their portfolios, the best form to invest in?
Actually, I think one have to see that what is the use of gold in their portfolio. First of all, one has to understand whether he is buying gold for investment or whether for consumption. Because as we know, in India, we have a sentimental values
Yes.
related with the gold. If you are buying for a let's say marriages or gifting, then definitely you should go ahead and buy physical gold only. But if you are going for an investment purpose, whenever we buy any investment, there should be some attractiveness, and secondly there should be some target that I will be holding this investment for, let's say, for couple of years or 5 years. So I think in context of investment, first preference would be SGB, because that carry 2.5 interest part. So I think you will be getting a dual benefit of gold also and interest also. So I think SGB will be the best. Other options are also available like ETF, digital gold, or we can buy internet. We can buy physical also. But I would prefer SGB for an investor, and other derivative products are also available if suppose somebody want to hedge their position for equity for with the gold. So I think SGB is recommended for investor and maximum gold ETFs which are available on Indian mutual funds.
Okay. Ajay, along with gold, we are also seeing that the white metal is also attracting a lot of price traction. Even that silver prices, they rose 900 rupees per kilogram just in a single day as well. And the kind of prices are inching towards 75,000 now. How are you looking at silver prices moving from here? And between gold and silver, if somebody has to choose as an investment option, how would you advise investors?
Truly, Sakshi, we have seen a poor performance from silver as compared to gold. If we talk about international gold and silver in last 3 month period, silver has given a negative 4.5% return, whereas gold has given 3%. That clearly shows whenever there is a geopolitical tension or any concern, people will prefer to buy gold rather than silver, because silver is a part of base metal also. And we have seen in last 1.5 year, the manufacturing number, retail number from China, US, UK is not performing very well. That is why silver is up till now underperforming. To gauge the relation between gold and silver, there is a ratio called gold silver ratio, which is currently trading near to 90, which suggests if we talk about in last 12-15 years, silver is very cheaper as compared to gold, but that need some trigger that could be from the manufacturing sector, or let's say from the China, because as we know from last 10 years there is a many new usage has been came for silver. Previously, 10 years back, we were using silver in a photovoltaic only, but now EV, solar panel, and 5G technology all are being used in silver. So I think as of now, silver has been slightly lag behind as compared to gold. But going down for next 1 year period, I am very much bullish for silver as compared to gold. Where in international we can see prices moving closer to $30 to $31, whereas on domestic side, multiple of time we have seen prices move to the level of 76, 78, but failed to cross. But this time the fundamentals remain slightly positive as compared to last few years, as Silver Institute has suggested deficit would be there. So I think this year prices can easily test around 90,000 to 95,000 and can outperform gold.
Okay, well, on that note, thanks a lot, Mr. Keria, for being with us on this edition and sharing with us all the insights and the outlook on both gold and silver. Where are the prices headed, the strategy one must have, where exactly to look for investing opportunities, and whether it is the right time to buy into these commodity or precious metals as well. Many thanks for being with us. Always a pleasure to host you. All right, with that, we wrap up this very special conversation, which was much needed of this hour. 65,000 now behind us as far as gold prices are concerned, and they are headed to even 70,000 towards the end of the year. As our expert, Mr. Keria, has pointed out, there could be slight dips, and around 62,000 could be a better time for you to take an entry. But, too much of a decline from the current levels is not being expected as of now, as there are a lot of factors that are working as tailwinds for gold prices going forward from here, and therefore you have to carefully think about the strategies that you go ahead. Very important clarification, you need to think of two ways, whether you are investing in gold as a consumer or investing in gold as an investor. So if it is a part of your investment portfolio, that's when you have to think about the digital options. In case you're only looking at gold, adding gold as part of your consumption, that's the time that you have to go for physical gold. That's the important clarification coming in. With that, we wrap up this very special conversation. Many thanks for tuning in.